Welcome to the Monday edition of the Tech Stocks Daily Podcast. Get ready to dive into an action-packed episode as we unravel the high-octane world of tech investing. Today, we're spotlighting Microsoft's AI-fueled ascent, complete with a 33% leap in Azure revenue, but shadowed by a workforce shakeup, including AI Director Gabriela de Queiroz's departure. We'll also unpack Agilysys' knockout quarterly performance, with earnings smashing expectations, and delve into how Netflix is shaking up the world of children's programming by bringing Sesame Street home to its platform. With strategic moves, surprising twists, and big news from tech's heavyweights, it's an episode you won't want to miss. Tune in for all the details that could influence your next big stock decision. Hold on to your virtual seats, because today's tech news is all about Microsoft, and boy, have they been keeping busy. The tech behemoth has made waves across various fronts, from workforce changes to financial performance and executives' musings, and we've got all the juicy details lined up for you. First off, Microsoft stock is shimmying its way up closer to all-time highs thanks to a whirlwind of factors, most notably its strides in artificial intelligence. Just Monday, Microsoft shares ticked up over 1%, inching tantalizingly close to that record high price of $468.35 achieved in July 2024. Investors are grinning ear to ear thanks to its latest financial reports, announcing a staggering 33% year-over-year jump in Azure and other cloud services revenue. CEO Satya Nadella's master plan: use AI to revolutionize and strip down costs, with AI now tackling 30% of Microsoft's coding tasks. On the flip side, that pep in AI performance comes with some cloudy weather. Microsoft plans to cut 3% of its workforce as part of an organization-wide shakeup. This move stunned many, especially given that even the director of AI, Gabriela de Queiroz, was marked for departure. It's a classic case of progress requiring a little room to maneuver, and some eggs have to be cracked. Hold tight, because the excitement continues with a new sheriff in Microsoft's AI town, xAI's Grok. Yep, at the Microsoft Build Developer Conference, the company announced plans to bring this machine learning powerhouse to Azure. It's a decision impacting their relationship with OpenAI as Microsoft inches toward becoming the belle of the AI ball. Microsoft's tantalizing moves extend beyond balance sheets and silicon. The company has also been pitted against peers in an absorbing industry comparison. While Microsoft boasts lower than average price-to-earnings and price-to-book ratios, suggesting tantalizing potential for growth, they sport a high price-to-sales ratio, denoting overvaluation from sales revenue. The company, though, stands robust with a formidable financial position, having a debt-to-equity ratio that evidences their muscular balance sheet. And speaking of muscle, former CEO Steve Ballmer flexed a bit of his own wealth in a reflective tell-all interview, where he admitted to being fundamentally changed by his own mountain of money and with the power that once came with leading Microsoft. Owning over 80% of his fortune still in Microsoft shares, he's luxuriating in the good life, even if he hesitates to call owning the LA Clippers a lifelong dream. So why is Microsoft in the news today? They've got their fingers in every tech pie, using artificial intelligence for evolution while shaking things up under the hood. They've triggered investor excitement with dazzling financial performance and kept tongues wagging with their fascinating mix of strength, strategy, and let's not forget Steve Ballmer's billionaire musing on wealth's impact. One thing's for sure, Microsoft's no snail-pace mover in today's tech race. Hold on to your keyboards, tech fans, because we've got some hot-off-the-presses numbers from Agilysys that are bound to catch your attention. Agilysys Inc., the hospitality software dynamo, just dropped their fourth quarter results for fiscal 2025, and let's just say it's all smiles for their accountants today. First off, Agilysys delivered a real showstopper with their earnings, clocking in at 54 cents per share, much higher than the 29 cents everyone was expecting. That's like geek Oscar-level performance, people. Their revenue also got a magical boost, hitting $74.27 million, overshadowing the $71.42 million analyst predictions. There's something to be said about rocking those quarterly earnings, folks. Why these numbers turned out to be a grand slam? Well, it seems the magic lies in their subscription revenue, which skyrocketed by 42.7% compared to last year, while total revenue saw a 19.4% hike. This growth, folks, signals that their shiny cloud-native software ecosystem is really hitting home. Agilysys also led us into another intoxicating performance, where recurring revenue shot up to form a record 62.2% of their total revenue. Talk about a gift that keeps on giving. Agilysys didn't just stop at great earnings. They're prepping for the future, like they're in some blockbuster tech sequel. Looking ahead to fiscal year 2026, the company expects revenue to reach somewhere between $308 million and $312 million. They might have set the bar high, with Benzinga Pro forecasting an even steeper $318.84 million, but they're up for climbing those heights. Top brass at Agilysys also struck a resonant chord in highlighting their strategic shifts. Ramesh Srinivasan, the Adept CEO, dropped some wisdom about their passionate hiring overhaul for professional services, which is clearly paying off in spades. Meanwhile, CFO Dave Wood brandished their acquisition of Book4Time among their wins, further enhancing their momentum in the cloud software game. With surging sales demand, they're steering their ship through this software revolution. And how did the stock market react to all this piping hot news? Agilysys shares perked up by 2.36% after hours, buoying spirits to settle at $84.98. That's a hefty fist bump from Wall Street. As companies virtually race toward Innovation and Revenue Summit, Agilysys is offering us a roadmap peppered with creative talent, acquisitions, and most importantly, killer numbers. If this fiscal year was described as transformational for them, the coming year promises more evolution, higher mountains, perhaps more popcorn-munching drama in the corporate theater for those who love market masquerades. Stay tuned, tech fans. Agilysys is in gear and moving fast. On today's Tech News Radar, Netflix is making waves once again, this time by bringing one of the most beloved children's shows to its streaming shores. Yes, folks, I'm talking about Sesame Street. Known for classics like Elmo, Cookie Monster, and who can forget Big Bird, Netflix is swooping in to secure 3 new seasons, along with a treasure trove of past episodes of the iconic show. Let's break it down. Netflix announced that it will stream the new episodes of seasons 56 to 58 and get cozy with 90 hours of Sesame nostalgia in their archives. This is like getting that golden ticket to Willy Wonka's factory, minus the chocolate river, but with a lot more educational value. Now you might be wondering, what's the big deal? With Warner Bros. Discovery closing the chapter on their streaming agreement, Netflix is stepping in to provide a new nest for this feathery franchise. The deal not only bolsters Netflix's growing portfolio of family programming, but also ensures little eyes across the globe can tune into these cherished characters. And they're not just stopping at screen time. The deal gives Netflix the go-ahead to level up by developing video games based on Sesame Street and its spin-off, Sesame Street Mecha Builders. Who else is excited about a cookie clicker game featuring Cookie Monster, or perhaps a word puzzle with Abby Cadabby? Interestingly enough, this partnership with Netflix doesn't just serve global streamers. PBS, Sesame Street's traditional home, will continue to keep things classic for US viewers, with episodes airing on their stations, along with their digital peeps over on PBS Kids platforms. As public television battles for financial footing, this Netflix and PBS tango could be the smooth move needed to keep everyone smiling and elbowing toward educational success. But let's not get too lost in the jubilations of this alliance without celebrating Netflix's savvy strategic play in boosting its repertoire of content for kids and families alike. Impressively, kids programming already makes up 15% of Netflix's total viewership. Move over Saturday mornings on TV. Netflix has a 24/7 party with cartoons and educational goodness ready at the press of a button. Now, here's where you come in. I want to hear your thoughts. How do you feel about Netflix bringing on Sesame Street? Does it make Netflix the streaming champion in kids' education and entertainment? Or is there another contender you'd champion? Slide into the comments section below and let me know. Maybe you grew up with Sesame Street, or have kids who love it now. I want to hear your stories and see which character was your personal MVP. The magic and morale of Sesame Street meets the digital age with Netflix carrying the torch. Aliens, waffles, and harmonizing monsters. Stream them if you got them, ladies and gents. Let's dive into Microsoft, shall we? It's been a buzzing day for big tech, and Microsoft is definitely on the radar with quite the eventful set of announcements. Some juicy details could make or break your investment strategy. Let's be sure to break them down. So should you buy, hold, or sell Microsoft stock given the latest news? Drumroll, please. I'd say is the move here. Here's why. First, let's talk growth. Microsoft's AI advancements are turning heads, with tools now accounting for 30% of the firm's coding tasks. Their leadership in AI and cloud computing provides a hefty boost in potential, evidenced by that formidable 33% rise in Azure and cloud services revenue. For investment thrill seekers seeing long-term potential, that's the juicy carrot hanging in front. However, even the strong can stumble. You feel me? There's a plot twist. The slick gain in AI implementation is alongside more sobering news of a 3% workforce cut, which includes making tough calls like parting ways with key staff like Gabriela de Queiroz, their AI director. Organizational shakeups could spell short-term turbulence. Remember, excitement can be risky without a solid foundation or path forward. Additionally, Microsoft remains a bit swanky on the valuation side. Its high price-to-sales ratio could steer some conservative investors into thinking the market price overtakes the value they see coming in from sales revenue. Despite strong financial health with an impressive debt-to-equity ratio, caution is warranted. No one wants to fly too close to the valuation sun and get burnt, am I right? What's compelling for the investor is watching how Grok from xAI maneuvers into Azure. The Tech Playground Challenge brings both opportunities and potential friction with OpenAI. For a continuation, you might hold on and watch where this saga leads. And a little walk down CEO lane is enjoyable too, with former CEO Steve Ballmer enveloping us in tales of business whilst kicking it with his vast biographical fortune. Not to mention market influence weighed heavily toward Microsoft stock ownership. For now, while they're not rewriting the tech history books, they're staying contenders, and holding could yield interesting dividends in the process. But remember, listeners, the world of stocks comes with its own set of surprises, so it's key to do your own research and consider your financial situation and goals before leaping into action. Disruption loves company, as they say, and that's something to muse over with all stock plays. So eyes on the news and be sure to tech it out wisely. Wow, what a whirlwind of tech-tastic news we had today. From Microsoft's stock body slam and AI advances and cloud services, even amidst internal shakeups, to Agilysys shattering earnings expectations and cuddly Sesame Street joining Netflix's viewer party, the market's been bouncing with energy. Each of these industry moves is drumming up anticipation for future growth and innovation. If this news buzz got your neurons firing, tap that like button. And if you haven't already, subscribe so you can stay in the loop with all things technology. Share this video with fellow tech enthusiasts and let them in on the latest market excitements. Keep your alerts on, because I'll be back tomorrow to serve up another round of fresh digital scoops. Until then, stay curious, stay connected.